In this video, we will review the Health Savings Account, or HSA, that the University of Rochester offers to eligible employees. What is a health savings account? A health savings account is a tax-advantaged savings account available to eligible university employees enrolled in the YOUR HSA-Eligible Health Plan. An HSA allows you to contribute tax-free dollars to pay for qualified medical expenses as defined by the IRS. The benefits of a health savings account. Like most bank accounts, you are responsible for your HSA. It is yours to keep. There is no use it or lose it penalty. Your balance rolls over year to year. Your HSA is portable. This means you keep your HSA if you retire or leave the university. You can also designate a beneficiary to inherit your account. Both HSA Bank and PayFlex offer investment options. If you invest your HSA funds, they remain in the investment account, like an IRA or 401k. This means that HSAs have the potential for long-term tax-free savings. An HSA offers the potential for triple tax savings. You make pre-tax payroll contributions or tax-deductible direct contributions into your HSA. The interest earned and any investment earnings are tax-free. And if you use your HSA funds for qualified medical expenses, your distributions are also tax-free. To be eligible to contribute to a health savings account, you must be enrolled in a high-deductible health plan, such as the YOUR HSA-Eligible Health Plan. You cannot have any additional medical coverage, including Medicare. Neither you nor your spouse can have a general-purpose flexible spending account. You can, however, have a limited-purpose flexible spending account. And you cannot be claimed as a tax dependent on someone else's tax return unless it is your spouse. Getting started. To contribute to an HSA, you must be enrolled in a high-deductible health plan as defined by the IRS. The YOUR HSA-Eligible Plan is a qualified high-deductible health plan that meets the IRS requirements. You must also meet the IRS HSA eligibility requirements. Once your HSA has been opened, your HSA vendor, either PayFlex for Aetna members or HSA Bank for Excellus members, will mail your HSA credit or debit card to your home. You will also receive a welcome packet with additional information pertaining to your account, as well as instructions on how to activate your HSA credit or debit card. As long as you remain eligible, you can continue to contribute to your HSA. You can also change your contribution amount at any time throughout the year, as long as your total annual contribution amount is not above the IRS annual maximum. As with any bank account, you only have access to the funds currently in your HSA, so depending on your account balance and your incurred expenses, you can swipe your HSA credit debit card at the point of service or pay out of pocket and reimburse yourself later once you have the funds in your HSA. Again, because your HSA is a bank account and you are the account holder, you are responsible for complying with the tax reporting requirements each year. How much can you contribute to your HSA? Your annual contributions must not exceed the IRS annual maximum. For 2018, the IRS maximum contribution amount for an account holder with single coverage is $3,450. The 2018 IRS maximum contribution amount for an account holder with one or more covered dependents is $6,900. If you are age 55 or older, IRS regulations allow you to make an additional $1,000 catch-up contribution each year. Please note, if you become eligible to have an HSA or turn 55 mid-year, you will need to prorate your contribution based on the number of months remaining in the year. If you elect to make pre-tax payroll contributions, your total annual election amount will be prorated based on the number of remaining pay periods in the calendar year. Each pay period, your HSA contribution will be deducted from your paycheck and deposited into your HSA on the check date. You can make post-tax direct contributions into your HSA through your HSA vendor, either HSA Bank or PayFlex. At the end of the year, you would want to claim any direct contributions on your annual tax return to receive the tax deduction. If you have an HSA elsewhere, you can transfer those funds into your new HSA and consolidate your HSA funds. How can you use your HSA funds? If you have the funds in your account, you can swipe your HSA credit or debit card at the point of service, such as a pharmacy or retail location, to pay for qualified medical expenses. You can use the online bill pay feature to pay for qualified medical expenses, such as a bill from your provider's office. If you don't have adequate funds in your HSA, or if you choose to pay out of pocket for qualified medical expenses, you can reimburse yourself later, once you have the funds in your account. You can reimburse yourself with an online bank transfer into your personal checking account. Remember to save your receipts and explanation of benefits. In case of an IRS audit, you may be required to show proof that the distributions from your HSA were for qualified medical expenses. Qualified expenses must be incurred after the effective date of the HSA by yourself, your spouse, your domestic partner, if he or she is also your tax dependent, or your qualified tax-dependent children up to age 26. Qualified expenses are designated by the IRS. The list below includes some of the qualified medical expenses designated by the IRS. If you use your HSA to pay for ineligible expenses, you will have to pay income taxes on the amount in question, as well as a 20% penalty tax. If you are age 65 or older, or disabled at the time of the withdrawal, you will not have to pay the 20% penalty, but will still need to pay regular income taxes on the amount in question. View IRS Publication 502 for a complete list of qualified expenses. Tax reporting requirements. Form 1099 SA reports all account distributions. The form is produced by your HSA vendor, either HSA Bank or Payflex, and mailed to your home in January. Form 5498 SA reports all the contributions to your account, including employer contributions and earned interest. This form is produced by your HSA vendor, either HSA Bank or Payflex, and mailed to your home in May. Form W-2 reports your pre-tax payroll contributions. It is produced by the university. Form 8889 reports all contributions, withdrawals, interest, excess contributions, and any withdrawals for non-qualified expenses. This form is completed by the account holder and included in their annual tax filing. Limited Purpose Flexible Spending Account. If you are contributing to an HSA, you can also elect to contribute to a Limited Purpose FSA. A Limited Purpose FSA can be used to pay for qualified vision or dental expenses until you meet your deductible. After you meet your deductible, you can use your Limited Purpose FSA to reimburse yourself for any qualified medical expenses incurred after your deductible was met. Check out the Flexible Spending Account video on the benefits website for more details. Visit the HSA vendor's website to view your account balance, make a contribution or withdrawal, view your transaction history, and receive year-to-date account information. For additional information regarding IRS rules and regulations pertaining to health savings accounts, view the IRS Publication 502 for a full list of qualified medical expenses, and IRS Publication 969 for information regarding tax filing requirements. The Benefits Office has a number of useful tools and documents available online before you make your elections. Be sure to use Alex, the interactive decision-making tool, to get an idea of how the plans work and a cost estimate for each plan. The plan comparison chart is also available on the Benefits website. It will detail the similarities and differences between the plans. Still have questions? Call Ask YOUR HR or the Benefits Office.